Many in Thailand remain unbanked despite financial inclusion efforts, partly due to a Thai baht 500 minimum deposit at traditional banks. Could virtual banks be the solution? Here to discuss this, we are joined by Dr. Charlie Asavatharatham from Lightnet Group. Dr. Charlie, what challenges do minimum account balance requirements create for financial inclusion in Thailand?
The minimum account requirement is actually just a tip of the iceberg that many in the Thai economy are still facing. Having a requirement such as you must maintain a balance of a few thousand baht, or otherwise you'll be charged a monthly fees, actually produces this hurdle for many people who have unstable income. Because of this fees, many people may choose not to even put their money into the bank account. And like I said, this is just one of the many issues that the segment actually is facing. For people in the economy, such as informal economy like gig economy, people who sell things online, people who provide services, people who provide what we call the solopreneurs, which are basically small businesses that people run by themselves. These people would have similar concerns when they're facing these fees in the traditional banks. And that's where I believe the virtual banks can come in. In prior experience, in Hong Kong, for example, prior to the introduction of the digital bank license in 2018-19, most banks probably have a similar monthly fee charges or minimum account requirements. After the introduction of digital bank licenses, the competitions come in, and nowadays in Hong Kong, it has become business as usual to not have any monthly fees. Such improvements in the service, I think, will also be introduced through the introduction of virtual banks when Thailand open up to new virtual bank competitions and new licenses. So everybody would benefit.
Very interesting, Dr. Charlie. What other competitive advantages do virtual banks have over traditional banks?
There are quite a few. Since I've come from a traditional banks, I can perhaps also do the compare and contrast. First of all, virtual banks are much lower cost by nature. It's because instead of having 1,000 branches or 10,000, 20,000 employees, virtual banks would probably have almost a few hundred employees and no branches. And as you can see, because of the lower cost, we're able to pass on the savings to the customers by offering products that are competitive in rates. Digital banks are also much more digital native, meaning we are much more attuned to using new techniques such as AI, new alternative data, and the customers would see the result. For example, when they apply for loans, the process to onboard them, to approve them would be usually much, much faster. And customers end up getting risk-based or lending products that are much more suited to them. And also, the virtual banks have digital native nature. Think of products that are digital native today that you're using, be it Grab, Uber, Google, Facebook. These are products that have no physical touch bases, and they generally move much, much faster. And virtual banks would also adopt a similar philosophy of adapt and learn and adjust quickly in order to come up with products that suit our customers. So these are some of the key advantages that I believe virtual bank can offer in comparison to the traditional banks.
Dr. Charlie, I'd like to ask you, what can Thailand learn from the success of virtual banks in other countries, for instance, Indonesia and Hong Kong?
In our consortium in particular, yes, we have already opened 2 other digital banks in, as you mentioned, Hong Kong, in Indonesia, and also in mainland China. So we can learn from them in a couple of ways. One, we can learn how to build the bank quickly because of the technologies that have already been proven in other digital banks. The banks in Thailand can start much, much more quickly by adopting the tech stacks already proven to work. 2, we can learn how to make a business, how to make money from them. Because of we adapt and learn in coming up with the digital products, virtual banks can have the advantage of coming up with the products, adapting to the customer needs, determining the product fit much, much faster. And Finally, third and quite importantly, the experiences from the other digital banks allow us to manage the risk better. Specifically, we're thinking about cases of handling the fraud, how to prevent, how to spot them. These are the experiences that we can learn from the previous digital banks. And finally, just to add on, our consortium in particular has a very strong ecosystem partners. We have reaches that have as many as 150,000 touchpoints in Thailand that touches 46 million customers. So together, from our experience as well as the ecosystem partners, we believe we can provide a strong position for our digital bank.
Thank you very much for joining us today and sharing your insights, Dr. Charlie.
Thank you so much.
Again, our guest today was Dr. Charlie Asavatharatham, President of Lightnet Group and Senior Advisor at Lightnet-WeLab Consortium. Dr. Charlie will be joining the Asian Banking and Finance and Insurance Asia Summit on February 18. For more news and a chance to network with industry leaders at the summit, please visit asianbankingandfinance.net.